Hello, guys. So, first thing, this is not tax advice or financial advice because lawsuits, duh. Just your friendly VTuber advice on how I make money in the markets and what I notice teaching people and what I wish I knew a while ago. And second thing, I'm going to assume you know a little bit about taxes already. So, without further ado, let's begin. Let taxes control your stocks. Seriously, stop doing things willy-nilly. When you trade stocks, you have a boss. That boss's name in America is Uncle Sam. If you live somewhere else, put down in the comments where you live and what you call your government, but in the US, it's called Uncle Sam. So in America, when you trade stocks, you have short-term and long-term. You can look at these charts that I put in front of me. You can see that short-term is treated as normal income, while long-term is a completely different tax bracket. It's like the rich person's tax bracket. You can make $47,000 in a year and pay no taxes on your gains if you're single. And if you're head of household or more, you can just see what that is. And even if you end up making $400,000, you're only paying like 15%. That's it. So it's like a completely different tax bracket. I'm not going to cover both of these charts. You can read it. And yes, the long-term chart is great for gains. But two things I want you to take away from these charts. Short-term is not bad. You can actually save lots of money on short-term. And the long-term tax code is not bad either. Wait, long-term isn't bad? I mean, yeah, look at it. The money you can make and not pay any taxes. This is true. But long-term can be horrible. Like really, really bad. So I'm going to teach you what lots of people do. Let's call these people Mike. He starts paying for a bunch of different stocks. All right, so this is the chart that I just kind of made up. All right, so everything he paid for, he put $20,000 in. It doesn't matter the shares. It doesn't matter if he has 100 shares of it or 10,000 shares of it. Doesn't matter. Everything that he paid was $20,000. Now, 2 months has happened, right? 2 months has happened. So the cost now is what the tickers are at as of right now. And this is all fictional, but this is to prove a point. He has 100K in his portfolio. And then you can see the gains off to the side, right? So what happens is that Mike needs money to eat and pay bills. And what does he do? Well, of course, Mike goes to the stocks that made him money and he takes profit. So he sells all the pots for a $5,000 gain. So Mike takes his $25,000. He goes and pays his bills, daycare's rough, and everyday expenses, rent. But he notices that he has $10,000 left over. Where does Mike put the extra $10,000? In the worst performing stock that he has, because Tots is like tater tots, duh. It's a great sounding name, and it has to make a comeback, right? And remember, dollar cost average. You hear that all the time on financial channels, dollar cost average, and also time in the market's better than timing the market. Yeah, that's fantastic. So, that's what he does. So now you have a portfolio that looks like this. Now keep in mind, he did take out some money, so now he only has a 90K portfolio out right now. If you notice, his portfolio, it was up by $6,000, but since he took money out, his portfolio is now down $2,000. He already took $5,000 in profit. He took out 25K, but then he put $10,000 back in TOTS, or TOTS. Now, if you look at the cost now, you've noticed that there's some changes. And 8 months later, right? This is 8 months later. This is what Mike's stocks look like. He hears from YouTubers always be taking profits. MOST, of course. That's what Mike is going to pull from. So he pulls all of his stocks on MOST because it's dropping a little and he's a little scared. Maybe it's reached its peak and he wants to be taking profits. So fantastic. And now he's going to divvy it up between POST and oats, or OATS, equally, because winter's coming and oats are going to not be readily available, so it has to go up. And he was also told to dollar cost average with POST because he also likes the stock. And TOTS scares him because it dropped over 26%. And he's like, ooh, TOTS, I don't know. I kind of gave you a lot of money. I think I'm going to drop some more. So now it's 16 months later. It's tax time. So if you notice, his portfolio is down quite a bit. It's down negative $27,000. That's not good. And now it's tax time. He pulled out $12,000 last year on his stocks. His tax bracket was 35%. That's with his federal, state, and local tax. He ends up owing $4,200 in taxes due to his short-term capital gains. He's mad and hates the stock system. He only used $15,000 that was already his to begin with. He really just put his $12,000 that he earned back into the stock market. If you think about it, why should he have to pay taxes on it? He's investing. Why is he being punished? Now he has to pay his tax bill. He says, screw everything, especially TOTS, TOTS, and he sells them for $8,000, taking a $22,000 long-term capital gain loss, which means he can only deduct that from anything he sells for a profit in the long-term gain category, which is any stock he holds for more than a year. But keep in mind, he doesn't owe any tax money, up to $47,000 already. And he knows that he will probably never make more than $47,000 in a year profit in a long-term capital gains scenario, let alone $69,000. So where's Mike at now? He made $12,000, but then he lost $4,200 to taxes, then took out all his money in TOTS, which ended up making him lose $22,000. That essentially can't be written off. So once you add it all together, Mike lost a total of $14,200. Now, if Mike knew the tax code, he would flip it. He would have sold for a loss short term and sell for a gain long term. Now, hopefully this made sense to you guys. If this was confusing, please let me know down in the comments. I hope this was helpful. And this really does happen. I'm going to put two of my personal examples of stocks that I'm just going to be destined to hold forever on screen. So if you think stocks can't drop like TOTS did, no, trust me, it can. I've actually lost a lot more, like almost 90%. And I should have just sold it, but since it's been over a year, I'm stuck holding it. And also, once again, guys, the tax code does get more complicated. Like you have your wash sale rules, which I'm not going to cover because I personally think that nobody should cover the wash sale rules. Like no one. Like I even have tax professionals that argue about the wash sale rule with each other. So I'm not going to cover that. Please consult a tax professional when you do your taxes. Make sure you get his name on that paper, guys. Yes, you definitely want to do that. You can't really go wrong with his name on the paper, being like, well, he did it. Guys, that is why you should have taxes control how you trade your stocks. If on anything. Don't use emotions, use your tax code. So anyways, guys, I hope this was helpful. If you're still confused, let me know. I'll make another video and explain it a little easier to you guys, or maybe slower. Anyways, guys, I hope you enjoyed the video, and I should be back tomorrow with a market summary. All right, bye.